To remain updated with the latest business news, click on the bell icon.
So there are about more than 60 high frequency indicators which we monitor. And today when I was morning looking at it, the high frequency indicators, and we look them in terms of red, orange and green. Red I did not see anywhere in the last column, which is the latest data we have. Excepting, I did not see red, but I saw orange in, for example, in tractors, in two-wheelers, in three-wheelers, and maybe one or two. But when it came to GST or e-way bills, or it came to, several other important activities, I find that they were in green. That means things are looking up. But again, these are numbers, and given the kind of uncertainty which we have, so we have to see how it pans out. But so far as India is concerned, even now the high frequency indicators of economic activity broadly look, they are in the green zone. The other thing which is very important, if you compare ourselves with the 2013 taper, when we, unlike the 2013 taper tantrum, unlike 2013, today we have, in the run-up to the current crisis meaning because of the war in Ukraine, in the run-up to the current crisis, our current account deficit is very, very low. And secondly, our forex reserves are very high. Over the last 3 years, our forex reserves have gone up by almost $270 billion or so. In January 2019, it was about just little below $400 billion. Today, as we are talking here, we have foreign exchange reserves. The latest data is 622 billion US dollars. That is already a published figure. Other than that, we hold a lot of forex in our forward assets, which will mature from time to time every month. And today we are holding about 50 to 55, in fact to be precise, 55 billion US dollars. We are holding it in the forward market, and they will all come back to us in the coming months. So 622 plus 55, our reserves are 677 billion US dollars. India is comfortably placed to deal with any effect of spillover or any challenge with regard to financing of current account deficit is concerned. So, economy is better placed today. On the external sector also we are better placed, but we are living in an uncertain world. There is no reason for complacency. We have to be watchful, and we are monitoring this very closely. We are also monitoring the crude and commodity prices, the volatility. Very closely we are watching them. Worries have been expressed in certain quarters and in several quarters about, the inflation going up in India. As I pointed out earlier, similar situations prevailed in 2020. It also prevailed in 2021. Today, again, the inflation for the last 2 months has been 6%. Whether the situation is similar, only time will tell. Our earlier estimate which we had given about the inflation scenario, we were looking at inflation, CPI inflation to be 4.5% by March of 23. Now we have to watch. I will not like to comment what is our expectation on inflation and growth, because that is something which I would like to leave for the monetary policy. But having said that, I would like to very emphatically say that while we are watchful and monitoring all the trends, international, global trends, regional, domestic trends, with regard to economic activity, with regard to inflation, with regard to growth, we are watchful, but at the same time, I can say that we stand committed, and we are confident of dealing with any emerging situation and dealing with any emerging challenge. That kind of commitment and confidence is there in the Reserve Bank. As we have done in the past, we are confident that we will be able to do it in the future also.
If you like the video, do like, comment, share and subscribe.